Hello dear traders, petar.jacimovic here from vicanalysis.com. I want to post the update on the major currency pairs and speak about the recent events we got in the US and also what we may expect in the during this week and what's my expectation on the major currency pairs. Also, I will explain you how the fundamentals drives the investors' opinions and how the fundamentals basically drive the supply and demand. I will start with US Japanese yen. Probably you already know that I'm bullish on the short-term perspective. A few days ago I started to buy, actually after that Yellen speech and so on, I started to buy the US Japanese yen since I saw the divergence between the two central banks in US and Japan. Anyway, my position, I'm still in buying position. It's not on this account because this is account for some near term or to intra trading when I have time. I have on my account where I have the short term position, I'm still in the buying position there, and I'm not afraid because the price dropped like 260 pips. I'm still expecting US Japanese yen to go much higher from this point. What was why the supply came in the recent days? Generally because of the manufacturing, non-manufacturing PMI. So we got that very out of expectation, the non-manufacturing PMI, which caused basically the fear by investors about a further rate hike in September or October. So that was the key reason why this very strong supply came in the market. Generally, this manufacturing, since we speak about the rate hike potentially in September, because that in the background and this misreading out of expectation, basically, that's the reason why we saw the weakness on the USD, and you see the reflection on the price. So the London session traders basically started and used this. The new traders and the London session traders sold massively there, and price stopped here and went into sideways. Basically, like 70–80% of the London session traders, they close position in this area because of course they go to office from when the London session start, and they establish position if they see opportunity, and they saw opportunity, they establish it. So most of them pretty much exited after this substantial drop, so they don't want to play, they exit at this point. But the Asian traders, this is again my view, and this is how I teach my students on my mentorship program, how I teach them to observe the market, and why the fundamental knowledge and understanding is important, because everything is related. Okay, so basically this drop, we didn't have any big news here in the Asia session, but with the knowledge what happened before, okay, that we got the reading here was expected was 51, something like 55, and the non-manufacturing came out like 51 something. That reading and that misreading out of expectation, basically the Asian traders, because they didn't trade this on the when the Tokyo opened, exactly when the Tokyo opened, they started to sell, and they sold, and they pretty much, in my opinion, they exited this point, and we can see that through the price action at this point. So basically this drop from this point to this point is caused because of the non-manufacturing PMI came out 51 point something, and expectation was 55. Anyway, this is still a reading above the 50, so it's a still expanding, and this is a still growth in this manufacturing sector. Okay, so this is a still growth, but this reaction because of the misreading caused the sellers to come on the market. Okay, anyway, the short-term perspective still is the same. Yes, we got a lower chance for the interest rate hike, but still, as long the Yellen saying the positive things for USD, and as long that there is no some bad signals from the Yellen, because this is what I care. If I observe the short term, I care about what the central banks and the key persons, what they speak. Okay, So this is what's bring the short midterm picture. This is more near-term picture, and this is very changeable. And this this near-term picture to intraday or near-term is more oriented to the news reading day by day. Okay, so it's going fluctuation like day by day, while the short midterm perspective remained, you know, for the short midterm period, what the central banks are doing, what is their monetary policy, and so on. So why I started to buy here? I mean, this was on my account where I trade a near-term perspective. I have where I trade only short midterm perspective with a larger risk taking there, because of also the larger stop loss. Basically, I base trade on the daily under my short-term perspective. But here, when I have time and when I do the intraday to near-term trading, I position myself like this. So we saw this drop. Asian, this is in my opinion, Asian traders joined the bad news from US session. But here in the price action, we got informations we need if we want to establish some positions. We know that this, we assume this, that this is the strength came in because this is a classic volume analysis, volume spread analysis. The bar closed in the middle in a very high volume, the largest volume, and the next bar is up bar. This cannot be the weakness. So there is no way when you see something like this and this is caused, if you know the sentiment of this, which is very important, then there is no way that this is a real weakness on the market. Because if there is a real weakness on the market, the bar should close near the lows. You will not see the next bar up. So this is all signs of the potential accumulation phase and potential smart and potential smart buying by smart money. So we got price struggling here, goes sideways, but tested the swing low here in this bar. Very successful test. It was on a high volume. So this bar also we got a test. This is a starting in the London session. This is another London session test, and this is the New York session test. So now when we got when the buyers tested the strength, how much sellers are strong at this point, they saw that there is no actually real selling at this point. So they started to buy, and I bought on the reasonable price action where I got also fractals. I like to use the fractals on my chart, but anyway, this is a swing high from the automatic reaction after that strong downward momentum, and this is my pivotal point. Also, we got fractals, upward fractals there, and one tick above I started to buy. Okay, this is a sign for me that momentum is good to buy. That smart money already did the testing phase, testing of the supply, and that buyers are ready to go higher, and that we may expect when the smart money start to buy later on, the crowd will join, and so on and so on. That can bring them on. So it won't surprise me. I will not be surprised if I see that price absolutely going higher. Maybe do some some spikes on the ECB, but not too big. I don't expect anything big. But there is no big news for the USD this week. This is a very, very good thing, because there is no more any kind of this potential. Okay, we already got, this was the largest news for this week for US dollar. So non-manufacturing PMI was the largest news. Okay, now when everything is gone, the sellers already did their job. When now the buyers can start the market. The strongholders from the short-term setups may also rebuild some positions together with the smart money and near-term traders at this point that can bring the demand on this currency pair. So that's why I'm buying here. My reasonable stop loss here is 101.18, all the way below this lowest low point. You can also place below this point here, but I placed all the way below this. And I have no take profit levels. I will try to hold this position as long as I see there is good progress and so on. Since there is no big news, I'm not afraid to hold this one even till end of this week. Maybe I can even catch back, maybe the price came back, which I'm expecting 200 pips up, and then finally break that 103.80 and go above. But again, we go step by step. So this is the my reading and what I'm also teaching the students on my mentorship program, how to properly read activity, because everything is related fundamentally, and I can so this here buying is related to the fundamental aspect and exhaustion of the sellers which came into the market because of no manufacturing. From the other side, the shorter picture is bullish on the USD Japanese yen due to divergence between two central banks. So that's why I'm expecting the higher price, and the technical analysis only confirmed that and gave me the also the technical confirmation from that. So this is my reasoning for this one. Now we go to the USD. So I will go through the USD and pound USD also, which I also post on my trading journal of Forex Factory, which I advise you to join and also discuss there. I post my analysis there. Now we're going to this example here. Okay, so here we got also bad non-manufacturing PMI. The demand came in because of this news and so on. We saw the very next bar is bullish bar. Just a pardon, I need to put the volume here. Just a second, since I don't see the volume here. I don't know, there is some problem here with the volume. I don't know really why is that. It should be there, but there is obviously some problem. This was the, by the way, very large volume, and this is also high volume, but the price closed in the middle, suggesting the supply came in. Anyway, the pivotal point from this area is 1.1223. This is my key pivotal point. I have the sell stop order there with the stop loss at this point and take profit, open it. Why is that? Because the this is only news effect, and I know that I saw that weakness in the background. What is the weakness? Look at this number, 1.1254. Look at that pivotal point, how the price respecting. Look at this, no demand. Look at this London session uptrust. Look at this strong uptrust. By the way, this uptrust is also caused fundamentally. So it's all fundamental reason. This uptrust is because of that Bank of Canada overnight rate and so on, and the buyers reacted. You know, there is some buyers which came in, and then sellers reacted, protected this area here. So this is also, so all the large movements you see basically got a fundamental picture in the background. So this is one thing which most of retail traders don't understand. Here, for example, we got this is the automatic reaction after this massive demand, and this is for me key level. If the price break this, will confirm the momentum change. Since we already got the weakness in the background, this may be a very good sell opportunity. Also, be careful on this one and put a very low risk, because you basically, we got a ECB meeting tomorrow, and be very careful with that, since that can create a very strong volatility. But anyway, if you want to try, even during that news, put a very low risk, and my advice to put a like sell stop at this point with the stop loss. You can put all the way above this, so to have a space for that ECB time tomorrow. So this is the one option, but my advice is basically to be on the hold on this one. I have one position there, but not too big here. So this is about the USD. About the pound USD, I'm already selling this, because this is a very good, and as you see, the price is progressing very good. I posted this setup on my thread, on my journal, Forex Factory journal. Why? The same pretty much reason, but we got even divergence between the let's say near-term economic events. What I mean by that, First of all, the demand on the pound USD is caused by, again, this is again non-manufacturing PMI, this action here, this 100 pips. Previously we also got the demand based here. This demand is basically also because of the strong reading, also I think in the production, or this was also on the strong event, which came out very good for pound. Back in here now, the point is here. So this demand is caused by bad out of expectation reading on non-manufacturing PMI in US. Anyway, today, very interesting thing, and I waited this to see what will happen. We got a bad manufacturing production in Great Britain, and that caused this uptrust. And since I already saw the weakness in the background, and I know that the demand at this point is caused by the news, and when I saw this, for example, you see this weakness here, the price respected here, also weakness, some uptrust here, uptrust on the when the London session started. So I see that there is no demand at all, and that this was just news effect, and that the pound is still actually weak according to the short-term, mid-term fundamental view. Okay, so this was absolutely driven by the news. Now, if you want to trade the near-term perspective, the pound, and benefit on intraday and in near-term perspective, you want to see what's going on there. Okay, so this uptrust basically is because the bad manufacturing production today in Great Britain, and now the price went lower. Basically, you can sell at this point here. It's not wrong to sell here because of this number. It was bad, and you already got weakness in the background, so this is a very good opportunity. But this also we got also big news for Canadian overnight rate and so on, and this created another weakness there, but it's still the same area where if you enter it here, you will enter a pretty similar area at this point if you waited this one. By the way, if you enter it here, the stop loss should be above this one. This will be the reasonable stop loss. And as you see, you have from the one side weakness in the background, and you got the new weakness in the pound because of this news, and this is what created a supply and sellers in the market, and the reason why I'm also selling, and I'm already at like 40 points in plus. By the way, I have take profit opened, but you can put you know, whatever you want. So basically you can put even on the swing lows on the larger frames. This is also not wrong. You can put, for example, at this point here 1.3 is reasonable take profit if you build. But if you want to wait, which is my advice to wait, because there is no big USD releases this week, so this can back all the way lower very easily, and I will not be surprised if we go all the way below, and you know, even where we started this one, all the way below. So yeah, that's what I wanted to post for you. I hope that you like this video. This is my current position, so I'm bearish on the pound USD. I'm bearish on the USD, but again, I still don't have the position here triggered. I need the price to go below 1.1223 and confirm the changing momentum, and confirm the testing phase and so on, and uptrusting phase, that it's all done, so the sellers may you know, join at this point. And USD Japanese yen, I'm bullish, and I explained you the reasons for this one. So far I'm in plus like 11 points, and also the short-term perspective, I'm very bullish on your Japanese yen. So this is how you trade, and I speak a lot about my trading on my mentorship program. I pretty much explain everything in very details, how you follow the central banks and their monetary policy if you want to trade a short-term perspective, short to mid-term perspective, pardon, base trade on the usual and according to the daily time frame. And then I speak how to trade a near-term to intraday perspective and base trade, also on the fundamental news, on the fundamental events, and how you can benefit from that. Basically, you don't need to trade basically the spikes at all. From time to time you can trade. If you found and you did research that we can expect some bad numbers and so on with the high percentage, yeah, you can play the pending orders and benefit and trade the spikes, the new spikes. But generally the smart money will always wait opportunity to establish quality position and don't try to catch the spikes for itself, like this spike or this spike. But again, in some situations, I also explaining in my mentorship program how you can also trade the spikes when we have the strong interest rate decisions, or some, if you did some research and we find that there is some good high probability of some readings, then we can try to benefit from that view. But so the very smart traders, the smart investors, they don't need to trade, and they don't trade usually spikes for itself. They will wait everything to think, and then define the quality setup. Okay, so I think that you got the point of this video. If you like video, feel free to comment. Feel free to subscribe my YouTube channel. Also, you can add me on the Skype and we can speak about potential cooperation. You can start my mentorship program. I'm also managing accounts. So pretty much, my advice is basically for you, it's don't lose time with if you want to professional trade. Okay, if you want to trade from time to time and watch the chart, then you can watch. You don't need to go knowledge. If you want to start professionally to trade and to be the full-time trader and build a professional trading career, just my advice is don't miss this opportunity, because the price for this mentorship program is basically very low compared to what you will learn, and you will learn basically everything is needed for the professional trading, and absolutely how to read fundamentals on the short-term perspective to the near-term perspective and intraday perspective. So pretty much everything covered together with technical analysis and the price section. The volume price section, fractals. Basically, you don't need anything else. You don't even need this. You can only watch basically the only bars, like the price section. So I even don't need the volume, because I know immediately if there is something big there, it will of course be the large volume. I mean, I don't, even if I have chart without the fractal, without the volume, without everything, only the bar chart or candle chart or whatever, or even line chart. So only the bar chart is enough for me. I see everything there in the price section. I see everything where is the good area to establish positions, where is not good area. So basically, but anyway, since I'm using volume and I mastered the volume analysis, I'm doing like more than 5 years the volume analysis. So that's why I have this, and I have also fractals, like also very good like additional thing here. We speak about the technical aspect, but again, technical aspect is the technical analysis. So the technical entry, I don't base trade according to the technical analysis. I base trade, and my reason for being in the trade is absolutely fundamental reason. But of course, the technical analysis is important because it gives us the good the entry points, stop loss, and potential take profit levels. So we want to benefit from our fundamental view and on understanding of the market. We want to benefit using the technical analysis. That's why the technical analysis is, important. That's it. Wish you good trading. Have a nice day, and see you soon.